All right, so we're going to kick this off. It's Friday afternoon. I'm in Sydney today at Earth AI's office, our friends and strategic partners on exploration at Sandover, and obviously hosting a session for investors, principally because we've been suspended and uncharacteristically quiet for a week or so, and because we had major news earlier today, which we want to contextualize, and we want to talk about the financing pathway that we've secured. And we want to talk about the catalysts and the deliverables that we've got ahead in 2024 as well. I want to just run through some housekeeping at the top, as usual. As I mentioned, here in Sydney today, and looking to host this session for 30 to 45 minutes, depending on Q&A. I think we've got at least 30 minutes to talk about the substance, and I can see already a lot of people in the room, and you're welcome to write in questions. We got the slides out relatively late, but in the slides and in the ASX announcement, you'll see an email address, and as I'm running through, feel free to email live to there. Katrina's here, she's going to pick up any questions, collate them, and I'll certainly get to them at the end. And that's also in the context of our broader and ongoing, shall I say, commitment to open and transparent communications and engagement with shareholders. It was highly uncharacteristic, everyone will know that, for us to sort of go dark for the past week. There's very good reasons for that, and I'll come to those. But I wanted to jump online this afternoon, and we made a big push today as well to make sure we got the announcement out. And additionally, I can confirm that our half-year audit process, which was held back, has been signed off pretty much as I speak, which means, happily, provided ASX follows through, as I fully expect, that we'll be able to reopen the stock on Monday morning, which was our objective throughout. So really excited to confirm that before we kick off. So that's sort of the housekeeping. Let me jump into the slides that we've prepared. But note as I go through this, there's two main sort of portfolios that I want to talk about. One is the financing aspects, sort of fully conceived, and the second is those catalysts and deliverables. And I want to emphasize before I get going, actually, that you should, in very simplistic terms, I think, conceive of junior mining companies in both those ways. You can have fantastic assets in the ground, for example, but if you don't have access to financing, and if you don't structure your financing appropriately, they're going to stay there. They're just going to be rocks in a ground. And similarly, you might have access to money, or might be affluent, rich, and so on and so forth. But if you don't have underlying fundamentals for a growth story, you're not going to build a great company. And so what we've achieved today and over the past week is really important confirmation that Tivan's got both. You need both. Access to financing ongoing, you need strategics, investments, you need, in some ways, creative financing, particularly for a company that's been through a massive transition like Tivan has over the past week. So I'll come to those things, but the framing today is think of it as financing assets, really simple. And today's principally about the financing. Okay, so I'll jump straight into the slides that have gone out. Okay, here we go. All right, so as I said, the track record sort of speaks for itself. We've done 3 raises in the past, not even 12 months, all slightly different. One was a placement and an SPP through mid-year, a small placement at the end of the year, and then today announced a convert and a placement associated with that. You'll see the priorities that I've pursued over the course of the past 12 months in this domain, notably to bring in new institutional investors to the register. And that's a journey, particularly given the starting point, which was TNG to Tivan. And that is an ongoing process. And then you'll see different sorts of instruments. You'll see different pricing. Sometimes the pricing reflects market conditions. And I would note that market conditions have deteriorated significantly in the critical mineral sector over the last 6 months or so, but specifically in the past 3 months, with the various companies that have been shutting down mines and the tightening of liquidity conditions in general. Sometimes that can impact how you perceive a discount. If financing conditions more generally conceived are tougher, then you should expect to see perhaps wider discounts. and different forms of financing being tapped. But you'll see from Tivan, they're a very consistent track record now. Two raises, maybe it's not a pattern, but I think 3 is. And all of these deals crafted with a high degree of sensitivity to shareholders' interest, notably the shareholders that endured the very long and disappointing journey at TNG. So we've pursued these different strategies, and in the most recent instance, the convert is a step change, really. You'll see the headlines in terms of a significantly larger quantum of money. And I think really importantly as well, you'll see that it's anchored by a very important and what I would now regard as a strategic investor at Tivan. That's L1 Capital. It's actually an Australian firm. I'd encourage shareholders to get to know them. You can look at the heritage online. The transaction itself was actually authored by L1 in New York. So I've been working with them for quite a while, actually. And I'm pleased to say that, and L1's permitted me to say this, and you'll see this in the press release, that L1 has been invested through a placement, one of the rounds in 2023. So this was a relationship that was building really over the past year. And today it's been crystallized, it's been publicized, and obviously it's provided Tivan with a really significant runway. And that's critically important, particularly at the moment, as I said at the top, because access to financing will differentiate junior miners for the foreseeable future, I expect. I think it was very clear to me, certainly from Q4, that conditions were getting tighter. And when we saw the mines starting to be put into care and maintenance, big project funding rounds being pulled, these are the hallmarks that you would expect at the bottom of a cycle. And those cycles are, again, often dictated by access to financing. So the convert is it's a very important deal. And of course, it was negotiated over an extensive period of time. Now, let me address, while I'm here, the suspension, of course, because I am aware that it would have induced some anxiety to retail. I want to acknowledge that. I'm not going to apologize for it, because it was important to have that time, and that time away from traditional communication protocols, if I can say, to sort through business. Sometimes you do have to go to the mat in business, and that's what we've done for the past week. I want to highlight especially that the decision to go into suspension was mine. We had a deal during the trading halt, and in my view, my commercial view, I expected to get a much better outcome if we had the extra time and we had the ability to negotiate across multiple possible pathways and with multiple possible investors. So it was a decision that I took. Obviously, it was heavily informed in terms of discussions with the board, and it's resulted in the outcome that we've got. There's simply no way that you can negotiate an instrument of that deal of complexity and retain competitive tension in that negotiation if you're in a 2-day trading halt. Absolutely not possible. And so whilst I am apologetic that it may have induced some anxiety across particularly our retail cohort, it was very much a strategic decision that I took, maybe a tactical decision, you could say, to ensure that Tivan got the best possible outcome that was available to us. And in that suspension period, it's been a really interesting phase, I would say. I've been able to reveal true preferences of different people that we work with, even different shareholders in some cases. And that's given me a lot more degrees of freedom than you would have in the ordinary course of business. And we've used those to great effect. And that's the reason we've been able to secure this deal, which clearly differentiates Tivan from other $100 million market cap junior miners. They're not putting together deals like this, certainly not with an investor with the renown and accreditation of L1. I view L1 as one of, if not the most sophisticated investor in this sector in Australia, and obviously with really significant assets under management. And I can confirm that through these extensive negotiations, their excellence in terms of analysis and in terms of capability has really shone through. It is a lot of work to close a deal like that and to pull all the pieces together. And the negotiation was incredibly professional. it actually, if I can share a personal anecdote briefly, it reminded me of being back in New York because the deal maker, as it were, is in New York. And when I started my hedge fund way back in 2012, 13, I negotiated a convert, and that kicked things off for us. So I've got extensive experience with this sort of instrument. I'm certain that it's the right fit for Tivan at this point in time. And let me talk to that a little bit as well. What the instrument enables us to do is to have around $4 million of cash up front. And that's obviously very important for us to move through the next stage gates and the next catalysts. But then it gives us a call on a larger amount of money. Now, there's a term referred to as mutual consent, and that means there has to be trust in that relationship. And what I would strongly emphasize is that there is. This is a shareholder that's backing us, and that's very important to recognize, and also a really, really sophisticated group. And what that means for me in terms of future rounds is that I will have the ability through the course of this year to pick my moments and to come to the placement market if we so choose, or to other forms of financing, knowing that the firm's effectively underwritten for this year. And that's great. That's fundamentally fantastic news. And I think it will be very well received by the share price, because we know lots of investors that are watching us very closely. We've made tons of progress with very limited resources in a very short period of time. And yet the concern, as it were, is always, where's the next round? Where's the next round? And really, really sophisticated investors probably also picked what I was up to, which is to say, last year, I was hemmed in by our lack of placement capacity. I couldn't do very much. I certainly wasn't going to approach major shareholders whilst we didn't have clear catalysts and deliverables to do a large discounted raise. And the facts of the matter were that our placement capacity all the way through last year was exhausted. It was exhausted by the acquisition of Speewah. So we had very little degrees of freedom in terms of financing last year. And obviously the company was going through this massive transition. And in that context, the tight discounted raises, whilst they were highly anomalous and showed our strength, and I think our, again, superior access to capital markets, that was sort of necessary. Now into the new year, we have refreshed placement capacities and we can be more creative. But this instrument is designed to preserve those placement capacities, because if the share price moves higher, as I fully expect, it will have very little dilutive impact, actually. It enables us to draw down at those higher prices, which I fully expect through mid-year. And importantly, it keeps me away from the placement market until I'm good and ready. And I will be ready. And I think that by itself is really important to understand, because the people that want to invest at Tivan, many of them are waiting in the wings, expecting a placement or what have you. Well, now for them, they will have to decide if they want exposure to Tivan. They've really only got one route, and that's to buy on market. That's to buy our shares on market. Now, I think that's really important. That's a real breakthrough for us. And again, I think it's the accreditation with L1, which is a difference maker. And it's that runway that we really wanted to secure. So apologies if it caused some anxiety. It was always under full control. It was tactical. It's led us to this vastly superior outcome for the company. And we're really excited to relist and to get back into it. And again, I wanted to share this news tonight to make sure you guys had a good weekend and you can sort of rest easy with the outcome and be excited for next week and be excited for the year ahead. So that's the convert and how we got there. I want to just briefly touch on, this is a bit technical, so I'll be quite brief here. One of the other things that I've been highlighting to shareholders, including at the AGM, is that there's a structural deficiency in liquidity in the stock. And again, this is a legacy issue. If you think about what I picked up when I took control of TNG, it was not much. I've said this on a radio interview last year. There were really no assets. There's really no equity in the company. There was a paltry amount of cash as well. And so you couldn't ask for a more impaired company. And on top of that, we had a register that was stale, distressed, and a stock that was pretty much mispriced. It was completely mispriced for the underlying fundamentals. And let me say as well that we're still carrying Mount Peak on a book value of, I think, around $50 or $60 million. And that's obviously an impairment, and we'll take care of that at the right time as an accounting entry. But the reality is that the company that I started with had nothing. And one of the biggest concerns I've had for about a year is the lack of secondary market liquidity. And this chart shows how low that liquidity was, even through the early stages of what is now Tivan 2023, a very meager amount of shares trading. And I think that's because retail's pretty bolted on to the story and the journey. And I personally really appreciate that. But then major shareholders as well, very supportive of what we're doing, relieved as well, and now turning to excitement. But it means there's no natural sellers and buyers. There was one liquidity spike you can see on the chart last year when Dr. Guy Debelle joined our board. It was a big amount of headlines, bit of excitement, but it popped and then it fell back to this really meager liquidity position. And I'm just highlighting this because I really believe this is a fundamental problem for the stock. Anyone that wants to step up and get exposure to the stock, one of the first things they look at, if they're an institution or a professional trader, is liquidity. It doesn't matter how good the story is. If they can't move their risk around, they're not going to engage. So we've started a structural series of steps to address this. The foremost of which was to issue options to legacy shareholders as bonus options and to some investors in December. We got those listed. And that has, in my view, already started to show up in a trend improvement in liquidity. Okay. Now you can see the chart tipping up, through the back end of last year and into 2024 as well. I'm emphasizing this today because we're seeing that improvement, but also because I believe the convert will influence liquidity conditions strongly in a favorable way. It's not just that L1's now sort of backing us, this marquee investor. It's the signal that sends for other investors and the ability for them to start to engage as well. And the nature of a convert as well is that it will promote active trading, including by L1. That should be expected, and that's quite normal. And so I do think we're on the cusp of a really strong uptrend in liquidity. And if we can achieve that, it makes it easier for other investors to come in, which we want, including on market, as I said. And it's the reduction of that liquidity premium, which is in the stock, that will mathematically help move the stock higher, along with obviously underlying fundamentals. So there is a lot of thought going into how to transition this entire company. It's not just the rocks in the ground. It's not just the superior team that we have. We've got fantastic fundamentals, which I'll come to in a second. What we're doing is programmatic and structural steps to improve the engagement with the stock and to improve the financial characteristics of the stock to lead to a higher stock price. Like that's what we're doing. And the convert is a really big step for that. And I think you'll be surprised. I think you'll see different forms of market volatility, and certainly I think much enhanced market liquidity as we get into mid-year in the second half of the year. So that was part of the thinking as well. There were other options on the table during the suspension, and one of them was potentially appealing, would have been quite dramatic. But where we've ended, I think, is the better outcome, and the board believes is the best outcome for the firm. And that, again, is because we've got a great sponsor on the convert and because it's fit for purpose for the expenses that we've got ahead this year. So that's where we are on financing. Let me spend just the last sort of 10 minutes of content on the business. You would have seen, I think, particularly through February, that we hit the ground running like really hard. We're appointing fantastic EPCs with Hatch, with like a Podium on the fluorite. These are top tier names. That goes to the credibility of the PFSs that we will ultimately deliver. And if anyone was at the AGM, I've listened to what I said. I am a cynic of the quality of PFS, DFS in Australia. And it's fundamentally important that our document's robust and authored by the right people. And when it's delivered to market, it will have that impact because we've got that institutional engagement. We've got lots of people watching the story now. So we did the EPC appointments. Obviously, we restructured the KRR deal to provide the room to do the deal we did today. Again, a very well thought out move. And again, showing that strong support that we've got from KRR as the previous owner of Speewah and as a major shareholder. And then we authored and brought forward Sumitomo Electric Industries on the vanadium to the public domain. And that was a big step, which underpins the credibility of the work that we've been in for a long time. Some of those who follow me on Twitter will know that I've been in Japan quite a bit and probably would have guessed it was Sumitomo in Osaka. They're fantastic. And them providing us with their vanadium electrolyte specification was a huge step. And that enables us to work towards a very important deliverable and a milestone, which is to prove that we can use Speewah ore to make their electrolyte and then become a feedstock for Sumitomo's Electric Industries VRFBs. So that's all very exciting. And then, of course, we found lead, high-grade lead. We believe, just for context, this is the highest grade lead that's been found in Australia at the surface for 100 years. And we've scoured everything we can historically. We can only see a couple of precedents, which is Broken Hill, I think it's 86, Charles Rasp basically finds the deposit, which becomes BHP, and Mount Isa around 1923. We know of nothing else that has ever popped out like this. So I'll come to it a little bit more at the end, but that was a really exciting moment for the firm, and it opens up new value propositions for the firm as well. And so when we look ahead, we've got all this excitement. And what I learned as we went through the financing rounds is that investors, and these are the instos, shall I say, they are also very focused on catalysts and value drivers for the year ahead. And in that context, it's very clear, abundantly clear, that where people want to see us go is where we've been going, where we've been leading them, which is fluorite, because the prices are high. It's shaping as a fantastic project, like shoot the lights out. And it's so close. We can deliver this PFS with LICO, I think, end of Q2. And that's really, really close and a huge value driver, pulling Speewah F on the Lassonde curve out of the orphan phase and rapid phase and up to the institutional engagement. So the fluorite anchors the deal we did. And I know that most of our shareholders, the larger ones, are laser focused on fluorite now. And it's fantastic that we pivoted when we did, and we've got a clear shot, and it's super exciting. And then Sandover, I'd say now, is potentially the second most important thing to our investors and to new money as well. There's a real excitement about not just the fact that we found this high-grade deposit and the fact that it's near the GAN and the fact that it's near Alice. That's exciting to me. There's excitement about how we found it, because it's a repeatable process with our great partners. I've got the logo on today with Earth AI. This is a disruptive technology that Roman and his team has built, and it stands potentially to cut the legs out from under traditional mineral exploration, which is a $1 billion business in Australia. What we achieved at Sandover is incredible. We've spent less than $1 million there over a course of a year versus the greenfield exploration budget from Australia. You can see this from the Australian Bureau of Statistics. Greenfield spend last year was over $1 billion. And spending less than $1 million, we've easily had the best find, easily. And that's the power of technology. It reduces cost, it provides speed. And in Roman's case, because it's so mature as a technology, it's leading to these drill targets. The lead stands out, but we've also got copper targets, lithium targets, and we're on course to drill in Q2 and Q3, which is super exciting. So what I'm saying here is that in this recent period, since we've unveiled fluorite, frenetic activity, which will continue, I'm back in Japan in early April. And there's two sets of meetings. There's the long run stuff on vanadium, and then there's the short run potential JV discussions or more on the fluorite, right? And what I'm highlighting is that the fluorite and Sandover, broadly defined, are the real proximate value drivers for this firm in 2024. And it was on that basis that we secured this fantastic deal with L1. So we've reached a point where we're going to push out the vanadium PFS for about 6 months. We've had this discussion with Hatch. They're fantastic about it because we've got such a strong relationship. They understand the commercial context of that. And we're going to deliver in the vanadium space a couple of main things. One is we're going to hit that Sumitomo test work program, prove it up. That'll be our milestone for the year in vanadium. And then we're going to keep pushing in Darwin, pushing hard as well to educate and promulgate the importance of VRFB. Now, this is with government, this is with the big commercial partners at Middle Arm. And I can actually confirm, now that I think of it, that I will be attending the Middle Arm Sustainable Development Precinct inquiry representing Tivan on the 11th of April. Scooter, if you're watching, you'll be very pleased to hear this. That will be a fun moment in the sun for Tivan, because we've got a huge following up in Darwin. And I think the way that we've shaped the narrative at Middle Arm is really important, and it will show in broad daylight at that very important inquiry. Middle Arm's been polarized between the big gas and then very active environmentalists, and Tivan's successfully forged a middle ground, and people are coalescing around our views now, and that's fantastic. So I'm really looking forward to that. So in vanadium, think about the Sumitomo electrolyte program. That's a key milestone, sets us up for many years ahead. Strategic research and development with the premier vanadium firm in the world. It's fantastic. I want to thank Professor Maria Skylas-Kazakos for making this happen. It's unreal. And at the same time, we've got these other value drivers that have suddenly come on the scene. So of course we're going to go that way. And we're going to make sure that our economic resources are focused on creating shareholder value. And what's really exciting for us is that we've got stuff which is like 3 months away. Fluorite, the lead. I mean, I'm going to be there. I want to be out there, pulling out these core samples with Roman. He's got his own drill as well, the team. And so it's going to be super exciting. Working very closely with CLC with that as well, Central Land Council, and of course the traditional owners. And of course, we're going to follow best-in-class engagement with traditional owners. There are shortcuts, if I can say, on country. You find something, a lot of those lower tier exploration firms, they'll go on country and they'll drill without even consent. Now, Tivan's not about that. We've marked the firm in terms of this inclusive approach, participatory approach with traditional owners. That's yielded these huge outcomes for the firm already. We've got now 2 heritage protection agreements in place at Speewah within a year. That's unheard of. And that's down to our strong relationship with Kimberley Land Council. And in Darwin, we've inked a deal at Middle Arm with Larrakia. Again, there's one prior for that. That was Impacts. And so on country around Alice, and people will know, I had that time there as a kid, right? We're not taking shortcuts because it's not the right thing to do. And also because we're expectant, we're going to find something. And of course, if you've got that mindset of doing things around town in Alice, and especially with the very important relationship with CLC and traditional owners, you want to do things the right way and in our way, in the Tivan way. So we'll drill once we've got through our heritage protection agreement. It'll be progressive across the different tenements at Sandover. And we've got a mine management plan. NT government, NTG are super excited about the lead. I'm sure we're going to get a government grant for that. If I can say, it's going to be great. So we could have a discovery pop at Tivan. It's entirely possible. Roman's only ever drilled 3 projects in Australia, despite all the stuff he's done over the past, I think, 4 or 5 years with Earth AI. And 2 out of 3 is discovered deposits. And effectively, we've got 4, maybe 5 targets now at Sandover. And obviously, I'm really excited about the lead, just because it's a blowout find and because of its location. 5 km from the GAN, you would dig that up, put it on a train and send it north or south. You'd have your workforce in Alice and the infrastructure costs would be incredibly low. You would offset the tyranny of distance from the port because you're so close to that railway. It would be incredible, absolutely incredible. I've sort of always said to Roman, not in jest either, that if we find something at Sandover, it's going to have to be pretty spectacular for it to be economic. But maybe we will, and it'd be great. So Sandover as a project is maturing. I won't go back into the legacy of how we cleaned it up and how we got our hands on it, but wow, it's exciting. I'm super pumped about it. And it was part of the value proposition on this round, certainly. So don't take the vanadium, pushing the schedule as anything other than excitement around the other 2 things. If they hadn't emerged, we'd still be prioritizing vanadium first, but they have emerged now. And of course, you're going to prioritize with your shareholders and with commercial intent to create that real excitement for the year that we've got ahead. But that development life cycle's there. We're diversified across all these value drivers. We start hitting stuff. We'll be able to build a proper firm, which is what I've always wanted to do. Build a firm that endures. And now we're diversified across location, across critical mineral, across project development timeframes. It gives me the ability to keep moving and to keep looking for those opportunities which can really crystallize until such time as we take off. And I don't think that's far away. We're close now. We're close. All right, next slide. This is the fluorite. I won't belabor the point, but this is the schedule. If you want to get your head around when to really focus on Tivan, on the fluorite, there'll be, we can say this, there'll be, we think, an upgrade to the JORC resource that KRR was carrying based on the data room. SRK's with us on that, looks like April. We are likely to define an exploration target. That's how confident we are. There's more fluorite in the ground than what's in KRR's numbers, and then validate that through a drill program in Q3, and effectively have 2 steps on our PFS. The first big reveal will be June, and then we drill and enlarge the resource and issue a PFS update in prep for a DFS, hopefully mid next year. So this is the pathway. I know a lot of our investors are now with us forever, and thank you. But for those that are trying to move capital around, June's going to be a big month. That first PFS reveal, that really authenticates what we've got, and we're very confident. And then the economics in that will improve again through the second half of the year, because if you've got more resource, you can make the mine life longer, you can increase throughput, and so on and so forth. But the foundations will be laid in that June period, and that will be a really, really exciting period for the firm. And we're doing all this because we're working so closely with KLC and traditional owners. We would not be on country without that, not this fast, and not ripping, if I can say, moving through the environmental approvals as we have as well. The wet season survey is scheduled for April now. It's been rainy up in the Kimberley. People are getting bogged, but we're on track to get it done. Building on the dry season survey that we already achieved last year. So we're on track with Enviros, faster than anyone could believe. And so that underpins the fluorite project and keeps us on track. So super exciting time, still on that education ramp, fluorite, but we're getting there. And this is now the core deliverable with, again, that upside optionality coming from Sandover, very low spend for potentially massive value for shareholders. And so that's pretty much where we are. And that's really what I wanted to cover off. This is the map of the lead, but there's many other things that are coming your way. I wanted to close out, I think, before I come to a couple of questions that we've received, by just emphasizing and coming back to the deal that we secured today, highlighting once again that L1's involvement is a big step. Having that sort of backing from a really highly pedigreed investor, the quantum of funds available, and I'd say the conviction as well, demonstrated by director support. Sometimes people, neglect that. Obviously, directors are in the driving seat, and you'll see if you look at the announcement closely that Dr. Anthony Robinson and myself both invested in this deal. Dr. Anthony was my wingman, for those that remember the campaign in the 249D, and he really wanted to back this deal to send a signal to investors that we've done so much transformative work, and now that we've got the runway underneath us, Anthony's conviction is extremely high, and reflected by his backing the deal along with me. And obviously, I'm already heavily invested in this company and still adding. So the conviction's really there. Let me then just turn briefly to Q&A, and we'll look to wrap this up on time. We've got one question. I did anticipate this, which was around why was this raise not shown to existing shareholders? And so I can tie that off pretty quickly, which is to say, the convert is a unique financial instrument, and encourage you to look through the terms as well. They're all fully disclosed so that people can understand it if they want to. I don't want to belabor the point, but I've got extensive 30 years experience in complex financial derivatives. So I'm very comfortable with its design. In fact, it was largely authored in conjunction with L1 by myself. And so it's fit for purpose is what I want to say. And obviously you can't open that up to other investors because it was a bespoke negotiation. Now there's a placement alongside, which is important because it validates the convert as well. And the reason we couldn't show that to existing shareholders, retail shareholders, is that it was an insto round, and there's only once a year where you can open up the same deal to retail shareholders. That's called an SPP, share purchase plan. And you may recall we did that in July. And so the calendar will reset once a year, and that will be July for us. In other words, if we do another placement, and I'm not suggesting we will anytime soon. In fact, that's sort of the point of the convert is, and it's after July, then we'll be able to open that up to retail shareholders. And we will, because I've always, and those that were with us from the start, or Tivan from the start, will know the importance I place on maintaining high engagement with retail. That's why I'm on Twitter once a day and providing that real direct artery into the thinking of management. I think it's great and it's fun. I enjoy it. Got lots of great relationships there. And so at the right time, there'll be another deal at some point. It'll be, I think, quite some distance away. Again, that's the point. But provided it's after July, we'll have the flexibility to offer retail support. But we won't be able to, we weren't able to do it on this time frame at this time because we're inside a year since we did the last one. Okay, another question briefly on the vanadium deposit, and it's asking, and I won't spend too much time on this because you've heard our priorities. It's asking about whether we're looking to, basically head towards the VRFB market, and the short answer is yes. I mean, that's the whole point of what we've been focused on. We're not looking to build out vanadium for the steel market, for example. And that does mean we can take our time because the grid storage demand of vanadium is only 10 or 15%, still predominant. That's going to change radically over the next 5 years or so. And so the priority, though, is to create those near-term value drivers, as I said, the fluoride and the exploration that we've got underway with digital technology and really, really good prospects. And we'll just move through, importantly, with Sumitomo Electric Industries. And if you're asking the question, VRFB versus steel, the clearest indication, confirmation that I can give you that it's really all about VRFB for us and having that sovereign offtake and capability is that partnership with Sumitomo. If you were focused on steel, you'd be prioritizing different things. So there's that long run pathway on vanadium, waiting for the right moment, gearing up, as it were. We will be back with Hatch at the right time. I want to thank Hatch as well. They'll probably be watching, for that relationship where we're able to have that flexibility. It's the goodwill in the relationship which has enabled us, to maintain it and to sequence it. But coming back to this year, and perhaps let me close out here. Yeah, 1 second. Yeah, coming back to this year, I just want to emphasize what I went with at the start on the framing. To successfully build a significant company in this sector, particularly from the frankly impossible starting point that we inherited, you have to have good fundamentals, and that means the best assets, the best. And you have to have access to financing. So think of last year as us getting those fundamentals underneath us. The Speedwire acquisition will never be topped as laying the foundation for this company. And it's yielded not just the prospects that we've got and our core mission, the long-term view on vanadium, titanium, and iron, even with Tivan plus technology. That is the long-term mission of Tivan with Sire as well. But it's long-term. It's long-term. And you've got to find other ways to dance, and you've got to find ways to move up those stepping stones. And the two ways that we've found and unlocked in the past 3 months, especially, critically important now for us. This is the way we can build a massive company without diluting shareholders, because we've got achievable, moderately sized projects and ambitions in fluorite. And then we've got these huge low delta options, but many of them at Sandover. And any of those hit, it's just going to go berserk. It will be berserk. And you can be assured that I will be doing my bit to retain that relentless positivity around the company. So it's those exciting things this year. And without going back in time, imagine the difference just waiting for another report, waiting for another FID and all the rest of it. No, it's all action here. I want action too. And so I'm drawn to the fluorite, drawn to Sandover, whilst anchoring that long-term core mission for the company and making tangible progress with A-list partners. And it's that, I think, that with the inclusion now of access to financing as three deals which no one else could have possibly conceived, particularly given the starting point, all sequentially planned, always upgrading the engagement with really credentialed investors. You can see the strategy and you can see it working. I think it will improve liquidity in the stock. That will help the stock. But then we've got those real proximate drivers to look forward to in the near term and through mid-year. Mid-year is going to be so exciting now. It really is. So I look forward to that. And I'll wrap here. There was a couple other questions, but they sort of have been addressed. They've been addressed in my comments. And mainly what I wanted to close with was just that undertaking for me that this was, it was my decision to pull us into suspension. If it did cause some temporary discomfort, again, that's acknowledged. This is part of building a company. Sometimes you have to make those hard moves. People who know me now will know that I'm not afraid. And I've said this many times, that I will do whatever it takes. And this was one of those moments. We did it. We did it successfully. The outcome's fantastic. Very proud of it. Kudos to the team for pulling through as well. And the board's been fantastic this last couple of weeks, especially. Always fantastic, but highly engaged board these last couple of weeks. And so with that, look forward to the stock reopening on Monday. I think I have to check my phone, but I'm sure all our ducks were in a row. And that was my aim throughout, to use this period to get that great deal, get the foundations for the company in place, the financial foundations for the year, continue to avoid unnecessary dilution for the shareholders that have been here, and then provide that upside run, because we've now got the drivers and the catalysts within reach. So it should be a really exciting time. I hope that message is well received. I hope you have a good weekend. And I didn't want to reduce the anxiety by getting on tonight. I hope that's been achieved, and look forward to more from us. We're really excited. So looking forward to pushing on with great enthusiasm and haste as well. So I'll leave it there, and thanks very much. Have a good weekend.